Well, hi guys, and welcome to the mini course. This is titled Catching Market Tops and Bottoms Using Elliott Wave Theory. So this is a short mini course, and it involves 5 separate mini videos, about 8 or 10 minutes long each. Stick around, watch them through. I'll bet you'll learn something that you haven't learned before. The first video is going to be called Identify the Dominant Trend. That's the overarching trend that's operating within the market at any one time. The second video, or second module, will be identify counter trend moves. So what constitutes a counter trend move, how to target those retracements, how to differentiate a trend move from a counter trend move, and what that means for your kind of stance towards the market at any one time. Module number 3 is identify maturity of trend. So the maturity of trend is how far along that particular trend move is within its wave structure. So, are you at the top of wave 1? Are you at the bottom of wave 2? Are you within the power move of wave 3? Or are you coming towards the end of wave 5 of it? How to read that in the price structure and how to act upon that knowledge. When you do figure out where you are, it really does kind of inform your stance on the market at that time. So then video 4 will be setting price targets. So price targets are targets for a particular wave to complete, or possible targets for a wave to complete. If you have a 1-2 structure finished within the trend move, you'll be expecting to move into wave 3. Where is that wave 3 likely to target? How is that form going to play out on the charts, and again, how that informs your take on the market at that point. And then the final module is number 5. This is entering trades and placing stop losses. So once we cover the first 4 modules, that's the base knowledge that really get you orientated in any market. Doesn't matter what you're following, currencies or commodities or the stock market. The big one is number 5. Module number 5 is entering trades and placing stop losses, and that's really what we want to do anyway. There's a base of knowledge to kind of get your head around first before you start using Elliott Wave to enter trades. So that's the 5 modules. Let's get on over and start module number 1, identifying the dominant trend. So here is the first module. This is identify the dominant trend using Elliott Wave theory. Let's just nail down what a trend move means. So a 5-wave movement identifies the direction of the dominant trend. 5 waves in the direction of the trend. That identifies the dominant trend. Anything that happens after that, you know that the impetus of the market is towards that 5-wave movement. So you'll get corrections against that movement, but the power in the market is towards the 5-wave movement. So 5 waves up identifies the trend as up, and 5 waves down obviously identifies the dominant trend as downwards. And that's all very well and good, but how does that translate into chart analysis and trading? I'm going to go through a live example with you. This is $yen, and this is the actual count that we're using in our members area at the moment. We'll identify the dominant trend. I'll go through how I count that and how I label it, and I'll show you what that trend means for the market outlook, for your stance towards that market. So once you've figured out the dominant trend, what to expect next, and how to use that to your advantage. So now that we've set the scene, let's get on into the charts, and I'll show you how I do exactly that. Okay, here's the $yen daily chart, which I was talking about there. The point of this video is to bring you through how to define the overall dominant trend in the market. Now, we're going to go through this chart, and I'm going to label it for you, and I'm going to bring you through what that means for the trend in this market and for the future of this market. So this is $yen. You can see that the most recent extreme low at 75.47 was in 2011. Now you're probably looking at me and you're going, well, why the hell are you talking about 2011 for? That's 5 years ago. It's well gone at this stage. But the point to Elliott Wave is to look at the historical action of the market, to make predictions from that historical action and fit it into the existing price structures and the existing wave structures that we know of, and to use that knowledge to predict future prices and future market action. So that's what the point to this little operation here will be today. I'm going to bring you through this this chart here, this rising price structure here. I'm going to label it for you, and I'm going to define the dominant trend for you, and then we'll bring you through what happened after that, and then we'll make predictions for the future. So stay with me. This should be at least very interesting for you. Okay, so the most recent extreme low in 2011 was 75.47, and then we had this lovely bull market up to 125.78. So how would you go about even starting to kind of label that, the waves, the internal wave structure of that? So the first thing I'm going to do is I'm going to take this price structure and I'm going to place it within a trend channel, and that what we do there is we pick the extreme lows of the price and the extreme highs. And the reason I'll walk you through why I do this. So there's our extreme lows, or the kind of southerly extents of this structure, and that's the extreme highs of the structure. Now that gets it in a nice trend channel. Now we can look at the price structure in an Elliott wave term. The first thing I'm attracted to is this central contraction here. Now I know that looks very like a contracting triangle. And I know a few things about contracting triangles. I know that they usually happen in either B waves or fourth waves. So this being a trend move, this being an impulse wave, I'm going to say that that's a fourth wave in the overall structure. So I'll just stick some trend channels or trend lines around that. And I'm going to say that that's a fourth wave. And that can orientate us towards the rest of the whole move. If that's a fourth wave, then what happened before that was wave 3. And you can see that it fits a wave 3 because it's the most powerful move. It made the most gain in points wise in the shortest period of time. So the acceleration here was at its highest in wave 3, and ever since that, after that move, even though price went higher, the acceleration and momentum disappeared from the price move. So price grinded higher, but not with the same momentum. It took probably about 8 months to bring the price from 77 up to 103. So 3,000 points. It took 8 months to do 3,000 points, and the whole move was 5,000 points over 4 years. So that gives you an idea of the acceleration in that particular part of the market. So before wave 3 comes wave 2. So we can label that wave 2. This retracement was quite a large retracement of the first wave up. So we can take wave 1 and label it at that first impulsive rise there off the low. And if you look at wave 1, you had an immediate impulsive rise. So 1, 2, 3, 4, 5. So wave 1 breaks up into 5. Wave 2 breaks into 3, and A, B, and C to the low. Then wave 3, it's an extended wave 3, so there's 5 waves and probably a third wave extension in there. Wave 4, a contracting triangle. Now what happened since wave 4? Well, we know that in a wave structure, wave 3 and 5 are likely, if not one of them to extend, both of them could extend. And it looks like what happened here is both wave 3 extended and wave 5 extended. Let's bring you through that. An extension is where one of those impulsive waves within the structure extends out, and each wave will trace out 5 larger waves itself. So an extending wave will probably make up about 50% of the whole move itself. So you can say here after wave 4 that wave 5 constituted about 50% of the whole wave. Okay, so let's go through wave 5. So there's the first impulsive move off the wave 4 low. I'll label that wave 1. So we had a decline off the wave 1 high, so we'll label that wave 2. And wave 3 within wave 5 even extended. So that brought us up towards the upper trend channel there in wave 3. And now take note of what happened here. A contraction in price range, which I think would be another wave 4 triangle, contracting triangle there. So we will put some trend lines around that. The final internal low of wave E of that triangle. So you got A, B, C, D, and E. Wave E, you label wave 4. And then finals pop to the upside in wave 5 of A. You'll notice that I'm labeling that high wave A. Now that just speaks to the larger structure that I think is at play in this market. You could as easily label that whole 5-wave structure off the extreme low as a 1. The expectation of either a wave 1 or a wave A high would be a decline anyway. So it would either be wave 2 or wave B. So in this case, I'm labeling that wave A to the upside. So now we have an overall 5-wave structure in blue brackets here. Wave 1, 2, 3, contracting triangle in 4, an extension in wave 5. Now, that's a complete structure, an Elliott wave impulse move to the upside. What does that say to us? I know it took 4 years to complete, but what it says to me is there's a larger structure at play, and this is only one part of that larger structure. I'm labeling it wave A. So wave A comes in an ABC structure. Let's label you an ABC structure here. So an ABC structure is 3 moves with an internal decline in the central part. Wave A up, as you can see, is what we've completed. So we've completed wave A. Wave B will come in 3 movements. So an ABC in wave B. And then we'll get a large C wave to the upside. We have completed 5 waves up in A. That defines the dominant trend as up. That trend should complete in 3 waves, an ABC pattern. So we can expect off the wave A high that we'll have a wave B decline. And wave C then should be, commensurate to wave A and around another 5,000 points whenever wave B completes, which I think should be soon enough. So that'll complete 3 waves to the upside. That'll complete that larger structure. But first we have to deal with wave B, and that's obviously a correction. So head on over to the next video and we'll talk about corrections, how they form, how to label them, and how to define them, basically. Okay.